everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. Now, today we're taking a look at the gold market. Now, if you were watching the markets at all today, you might have fallen asleep already. It was a pretty slow, I think is almost an understatement. It was a very slow day today, with the market not really doing a whole lot. So you had to play it a little bit more guarded today, that's for sure. But overall, looking at gold, it still had a pretty good day with a gap higher. On that first candle of the day, immediately fills the gap, pulls back, hits the gap, and bounces right back higher. And this is where we started picking up on some of the possible trouble. The first candle of the day is a doji. Nobody likes seeing that, right? Dojis can be a pain by themselves as is, let alone the very first candle of the day. And that's going to have a lot of traders thinking, I don't know, we don't want to do anything right now because we don't trust it. We get a bullish breakout, but again, nobody trusts it, so it kind of just falls apart. Sellers finally get a strong bear candle, but the big clue, they couldn't even trigger in underneath it. And that's where a lot of sellers will be waiting for a possible morning reversal, given how weak everything was. A lot of sellers were probably stacked up underneath that third candle of the day thinking, I want to get short and I'm going to take it down to prior low of day. They didn't get triggered in. So knowing that there aren't any sellers in the move, they followed up with an immediate strong bull candle right into the prior high of day. This is a buy signal. We talked about it in the room, but I'm not a huge fan of it due to buying into the prior high of day. But it did end up working. Nice little bounce higher there, popped through the prior high, and pull back, use it as support. Now, acting as support here, it doesn't necessarily mean that, you should be buying off of the initial bounce or anything like that, but, looking at this move, it's a very strong rally higher, right? This candle's closing on its highs, nice strong candle, nice strong candle, nice strong candle. At the very least, we can assume that the buyers are going to want to come in on a pullback given the overall strength, and it makes sense. So buyers start buying into the pullback, they buy the prior high of day, and their main objective is just to retest the highs, and that's apparent given the wick up here. Pretty much all the buyers look like they took their profit off the table and called it a day. We started going a little bit more range bound again, heavy selling signal, and sellers may try to take that. We're still selling directly into the prior high of day, and there's obviously some issues with the bullishness still pending here. But given that, the sellers may give it a shot, and they did, right? Nice bear candle, terrible follow through, right? So looking at what happens, where the traders are likely to get in, and are they happy with it, right? They got in, nice bear candle down, okay candle follow through. I mean, it did close beyond their entry point, so they're probably feeling okay. And then they get a doji into a strong bull candle closing back up. Now, it didn't close very strong into itself, but in the context, it's a strong bull candle because it's going to shake the confidence of the sellers. And the reason behind that is, notice where their entry point would be, right? If they sold here, their entry point is the prior high of day. If this candle triggers above, they would be taking a loss, which means that now they've had a profitable position turn into a loss. Emotion is going to take hold of the sellers, and they're going to place their stops above that candle to disallow any further movement, and that allows the buyers to jump in again for another rally higher. Now, this is where it gets even more interesting, because notice what happened next, right? If they didn't exit there, look where it came back to. Their entry point right there in the prior high of day came back and tested their entry point to the tick, and maybe they got filled, maybe they didn't. I know my luck, I wouldn't have been filled if I was still in it. So if you get this big, strong bull candle after testing your entry point and not getting filled, do you think they're going to let that go past them again? No. They're going to place their stops down, and they're going to exit if it goes above it, and that leads into a big breakout move to the upside. So context ended up becoming a perfect storm higher, and that started leading into a bull channel as well. And with that bull channel, we get that big bull breakout. Buyers, there's no way the buyers are going to want to buy up here given how weak it is, so they're going to wait for a pullback. We get a nice little pullback, one bounce, two bounce, and that's where the buyers jump back in for another rally up. So just a phenomenal day of price action for both psychology, especially psychology, creating that perfect storm, along with just the general technical analysis. So that's going to do it for this one. Hopefully you learned something. Hopefully found it useful, maybe a little entertaining, and we'll see you next time.